see your screen perfectly.
Perfect. Right. Good. Always good to check that, get the technical things out the way at the start. So hello everyone. As Fraser introduced me, my name's Heather. I am one of the lecturers at ICAS. If you haven't heard of ICAS before, we are the Institute of Chartered Accountants in Scotland. So I'm one of the lecturers there. Primarily, I lecture in financial reporting, financial accounting, business acumen, and assurance and reporting as well, which is all to do with audit, but you don't need to know about that today. I'm going to be using all of my financial reporting knowledge, bringing that to you all. We're going to have a little bit of a think about the financial statements that you guys are going to be interpreting and producing your report on. So luckily, Fraser provided me with an example of what you guys are going to be producing in the kind of template. So I've had a little look at that. So I've been able to tailor what you're going to be looking at. And we're going to look at the financial information and what you're going to do with that in your report and how you're going to report on that data and how you're going to interpret it, okay? In terms of how it's going to run, as Fraser hinted at, when I share my screen, I cannot see the chat box at the same time. So please do pop any questions you have in there. Fraser can shout them out to me, or I will make sure to come back and kind of check after each little kind of section, like a natural stopping point. Also, if you want to ask on mic, you're more than welcome to do so. Again, there will be opportunities to do that. This session really is to help you guys with this part of it. So please do ask me any questions at all that you have to get the most out of the session. So without further ado then, I'll kind of go on to my first couple of slides. So just a bit of an introduction then. What we're going to focus on today is I'm just going to do a little recap of record keeping. Now, in the prior session, if any of you were in that, we did have a little bit of a think about record keeping, a kind of a whistle-stop tour, but I just want to kind of recap that because that's going to be able to help you analyse your financial information, okay, what the records that you've kept. We're going to think about, well, what are our financial statements? Again, introduced very high level last time, but you weren't quite at the stage about analysing them and interpreting them. So we're going to think about that a little bit further today. Think about the key elements of our financial statements. So our income, the money that you've made based on all of the things, the activities that you guys have been doing, whether that's been selling things, providing services, whatever it is. The expenditure that your project and your company that you have has incurred. Any assets that you might have, and I will go through exactly what these mean. Any liabilities that you have, again, we'll go through this in detail. And any capital that you have in your company, again, we'll go through this, but just want to reiterate that's what we're going to focus on. And then I've got a bit of a section, I'm going to think about the reporting that you guys have to do. So you're going to have to look at the financial statements are prepared for you based on the systems that you have been using for Young Enterprise Scotland project. So you've been entering all your data as you go, I presume, and it generates your financial statements. So you're not having to actually generate them from scratch yourself, which is great because I could do a full week on that. So we're not doing that, but you are going to be thinking about, well, what do these numbers mean? And you're going to have to prepare sections of your report on these numbers. You're going to have to report on your financial performance and things like that. So I'm going to have a think about how are you going to do that? What sort of information are you even going to be talking about? Where do you start? Apart from just saying, oh, this number is this, and this number was this. You want to actually think about, well, what does that mean for the business? You're going to be telling the story of what your company has done for this period of time that you've been doing the Young Enterprise project. Okay, so that's kind of what we're going to focus on today. If there's anything in particular that any of you have questions about or would like to cover, please do let me know and I'll make sure to try and answer that as we go as well. And I've got my little, forgot about my little picture that jumps in there. So thinking about our record keeping. So what you've done so far is you've tried to keep records of what's been going on with your company. And you should be doing that for lots of different reasons. You should be doing it for planning so that you could have planned various different things. And you might have done this without even realizing you were doing it. But in reality as well, if you were to actually kind of, if this was a real company that in the real world that you've gone and set up, there might have been tax implications for this as well. So you might have had to have these records for HMRC for your self-employment or your company tax. Also just helping with strategy and organisation. But first of all, stock control. So you would have had these records so you could say, right, okay, well, I've only got, let's say I set up my business and it's called Heather's Hairbands and I'm making hairbands, okay? And I look in my shelf in my room here and I say, oh, I've only got 5 hairbands there. I'm making an average about 10 sales a week. That's not very good. That's only going to last me half a week. And then I'm going to have to go get more stock. So record keeping and keeping detailed records so you could easily manage that process was important. Also, your number of sales, which I'm sure hopefully all of you have recorded, fingers crossed that you have. So you'll be able to keep a track of the sales. You'll be able to keep a track of when the sales came in, what month, what day, what time even. You could even go to we actually make sales at the weekends rather than during the week, or we make them in the morning, or we make them in the evening. But you don't have to go to that level of detail, but you might have that information available to you. You're also wanting to kind of link that to your profit. You're going to say, well, how much out of how many we've sold, how much money have we made? And that's where our financial statements are going to come into this. It's going to help us work out how much money at the end of the day, after everything that's gone on, how much have we made? You wanted to keep detailed records of your cash. And I'm sure, again, all of you have done that. That could have been electronically or it could be through an actual cash book. Again, making sure that you could actually continue to trade. If you ran out of cash, you're going to have to do something. You would either maybe have to borrow money from somewhere, get a loan from friends and family, or something like that. But you'd want to manage that to make sure you had enough cash to do everything you wanted to do as a business and continue to trade. So I'm sure all of you were doing that as well. One of the things that was mentioned last time was who owes us money. Now, this is called a debtor, and I'm just going to jot this down with my pen if it will work here. Okay, this is called a debtor. So I want you to make sure that you can look at information about maybe people that you've provided things to, but they haven't paid yet. So that is basically, say, for example, I sell to you one of my hairbands and I say, oh, it's okay, you can pay me next week. You don't have to pay me today, you can pay me next week. But if I'm preparing my financial statements today, I've had that sale because I've given it to you and you've promised to pay me, but you haven't paid me yet. So that would be a debtor. You would be in debt to me. So that's a debtor. So we want to know about that. And then we want to know, who do we owe money to? And these are going to be known as creditors. Okay, and again, that's like, okay, I've then gone to my friend who has loads of materials and gems to make my headbands look really fancy. And I say, right, can I please have 10 bits of silver sparkly material? And they'll say, yep, no problem. That's fine. Just pay me next week. And I'm like, cool, thanks very much. So I've committed to that. I've got the material and I've said, yep, I'm going to pay you next week. But at the moment of preparing my financial statements, I haven't paid that person for that 10 bits of sparkly silver material. So I owe them money. So that's a creditor. Now, our debtors, you'll see in a second in our financial statements, sits in our asset section. And our creditors sits in our liabilities section. Now, you might not have any of these, but it's good to be aware of just in case that you do, because it is important to comment on these if you actually do have these things present. Oh, I've gone over my picture. Sorry. So the first thing then, this is pulled together from the Young Enterprise Scotland sheet that was made available. What's the word? It was from the sample report that I was provided with. So this should look similar to what you get from your system that you've put in all your information into. It's going to generate something like this. Okay. Now this is called our profit and loss sheet, and this is basically telling us over the course of this period, whether it could be a year for your company, or for this case, it's going to be how long you've been running Young Enterprise Project for. So it's going to tell us how much money have we made in this time. So let's kind of look at each of these lines in turn. So the first thing there you've got is your sales. So that's going to be, oh, just check my pen's working here. Oh, it's having a little moment. It's always the way. Oh, no, it's not wanting to play ball, guys. 2 seconds. Let me see if I can get my pen working, just so I can annotate as we go. There we go. So your sales is going to be the number of units that you've sold or services that you've provided times by your selling price. So I'm just going to keep going with Heather's hairbands, okay? That's the business that I've created in my head, and that's what we're going to use. So that would be saying, well, that will have sold quite a lot of hairbands there, actually. So that, say I had, for argument's sake, my hairbands cost £5. I sold them for sale. I sell them for £5 a hairband, and I've sold 10 of those. That would be 10 times my 5. So that would be £50 that I would have made in sales. Okay, but in this example here, it was 576. So they've sold units times by however much they sold them for. So that's what the sales figure there is telling us. Then we come down to B, C, and D. Now, B, C, and D is all to do with the cost of making the sales that you have made. Okay, so you've made these sales 576. But what then we need to consider is, well, how much cost have we incurred to actually go ahead and make those sales? You didn't make them for nothing. Well, maybe you did. Just, but even materials cost money. Even something you had lying around your house. Initially, that thing would have cost money. Okay, so this part here, which I'm going to draw down the side, leads to what's known as your cost of sales. And what this has helpfully done in this system is it pulls out the formula for the cost of sales. Now, your cost of sales formula is your opening stock, but you don't actually have any because you're a new business. You've just started out this year. So you would have had nothing, right? Plus your purchases, which you've made in there. So this is going to be everything you have purchased for your sales. So let's say Heather's hairbands, it would have been my material that I would have purchased, my glue for gluing things together, my gemstones for attaching them on, I don't know, sequins, etc. Whatever I wanted to stick onto my hairbands. Then what you do is you take away anything which is left at the end of your financial period. So let's say I'm doing this for my Young Enterprise Scotland and I've made 100 hairbands and I have sold 90 of them. Well, then I have 10 that would be left in my closing stock, okay? So I haven't sold them. They're sitting still on my shelf. So they cannot go into my cost of sales because it is what it says on the tin. It's a cost of making a sale. But I haven't sold those 10, so they can't go into that. So in terms of our cost of sales formula, it is your opening stock, which is going to be nothing here, plus your purchases, line B, less your closing stock, whatever's left on my shelf, equaling to your cost of sales. So that's telling us for those £576 worth of sales, that cost me £15 to make those sales. And that's what the cost of sales formula does. It says for the amount of things that I sold, it cost me £15 to make those. Okay. And that then allows us to calculate what's known as gross profit, which helpfully tells us there is A line minus D. Okay, so it's that 576 less that 15. And our gross profit is an important figure because our gross profit is telling us purely from the sales activities that you're doing, whether that's be providing this service or selling my hairbands or selling whatever it is. This is the amount of money that I have made from that alone. Okay, so not considering anything else in the business, purely from my sales point of view, I've made £561. And that's important because you want to know that information before considering anything else, just on the sales alone. What have you made? Okay, so that's really important. But then what you have to consider is you're thinking, well, but it's not just your material, your glue, your gemstones, your sequins. There's other things. So there's going to be things like I'm going to have notebooks that I have purchased in order to record everything that I need to record, all of that record keeping that I just spoke about. I'm going to have notebooks. I'm going to have pens. I'm going to have maybe even stamps or, staplers for my invoices or something like that. So that's going to have to be an expense to the business that I have paid out. It's still to do with the business, so it's absolutely a relevant thing that I need to be paying. So what we then have is these other expenses of the business that aren't directly attributable to making the item, but they're still related to your business. So the first one there was like, for example, stationery. So all of my paper, my pens, etc. that I've got. So keep going on my admin. Another one there you have is rent and hire. So maybe you have rented a market stall to sell your items at like a craft fair or something. So that might be something there. Or maybe you rented office space, for example. You might have rented your classroom. You might have rented the use of, I don't know, a piece of equipment, for example, just to help you. You might have rented a laptop to do your admin. That might be coming through there. Then you've got miscellaneous expenditure, which is 0 here, but that's going to be anything that doesn't really fit into those first two categories. So anything else that you think of, something like maybe postage. You could maybe argue that could go under stationery, but something like postage stamps, for example, or any other outgoing money. Okay, so this is, you're looking at all your money that's gone out of your business and you're categorizing it. And that's helping you analyze your expenses, and it helps you kind of see, well, how have I performed? Could I have spent a bit less there, or is that kind of reasonable? Or actually, could we have done with spending a bit more there, which might have helped us out? Maybe we didn't spend as much as we thought. Any registration fees as well, they're going to come through there. What you then do is you total those up and you get to your total expenses for those ones. So that's 51, just the stationery, the rent and hire here in this example. Okay. And then what we get to is what's known as our gross profit less our total expenses, which is our operating profit. Or sometimes you might have heard of this. Oh, the yellow's not going to work. You might have heard of this as net profit. No, it's down the bottom. I'm skipping a line because we've got our other income. Where's my rubber? There we go. Okay, so we're at operating profit line first. Sometimes this line, that's where I was thinking of, this line isn't needed because you don't actually have the miscellaneous income here. Miscellaneous income is basically anything else that money you get in, but it doesn't relate to your sales. So let's say someone said to you, maybe you just did something on, you gave someone a piece of advice and they're like, I want to pay you for that advice. But that's not what you do as a business. You sell Heather's hairbands. So that's not sales, that would be other income. Or another one, bank interest. So you have your money and you deposit it in a bank. And because you've deposited it in a bank, my pen stopped working again, guys. Because you've deposited in the bank basically rewards you for doing that, and they're going to give you interest on that money that you've deposited with them. Now, you would see this on any accounts that you guys have of your own money. You might see bank interest coming through. So I'm just going to pop down here. Bank interest might be an example here. So that's basically anything else that doesn't relate to your main activity. Now, your main activity is all to do with your sales. So for me, that's Heather's hairbands. Anything else I get in, it'll go to my other miscellaneous income. But for you, that might depend completely on what it was that your company was set up to do. Then you get down to this very last point here, which is net profit. And net profit is our gross profit up here, less our total expenses to get to net profit. Okay, so it's working through those three figures in yellow. The sales, less the cost of sales, less your total expenses, plus other income, miscellaneous income, but we don't have any here. So we get to £510. Now, again, this is another very important figure. It's different from gross profit, but it's still very important. It's telling us something different. This time it's telling us, after all of the expenses that I have incurred as a business, how much money did I make? So not just to do with the sales activities, but everything else that I've done as a business. How much money did I make at the end of that? And in this example here, it's £510. Okay. We've then got a little bit further that you guys are going to have here, which is your net profit, and then you're going to have a winding up fee payable to Young Enterprise Scotland, which is going to be taken off of your net profit, and you get to a net profit after this winding up fee. That's something quite specific to this project. You wouldn't ever see that in real life, but that's something just to watch out for there. So £408 after everything you've done for the year. Perfect. Happy days. So that's the information which is in our profit and loss sheet. Does anyone have any questions on that part so far before I go on to the next bit?
There was one question, Heather, coming from Miss Brotherston down in the Borders, that if the school paid the £100 registration fee on behalf of the team, where would that go? I'm thinking that perhaps miscellaneous income might cover that, because I think registration fee will automatically come in because all teams will have had to have paid a registration fee as part of the programme.
Yeah, so if someone's paying it on your behalf, I mean, you still kind of owe them money, really. So you would have to show it as an expense because it's still an expense on behalf of the business. So it would still come through probably as your registration fee, but then you would balance it off in terms of your cash, probably against your miscellaneous income, as you've said, Fraser. But you would still have it coming through in two places, basically. So it would net off to nil at the end result because the school's paid it, which is fine. But it would just need to still be shown, and then you would probably comment on that in your report.
And one thing I put in the chat there, just for people who are thinking about what that miscellaneous income might be, I know a lot of teams do fundraising at the start of the year to generate their startup capital. So that would be the place where that would go in as well, just for teams who are sitting there thinking.
Absolutely, yep. Fundraising, perfect example there coming in there.
Yeah.
Great.
That's all the questions so far, Heather.
Not a problem. Forgot to put all these little fancy things to make it nice and interactive, but it takes me a while to click through. So I've just spoken through this here. So when we're thinking about our profit and loss account and what we want to analyse from here, I've kind of jotted down some ideas that you're going to then put into your kind of reporting. So in terms of your sales, that first line at the top, I want you to have a think about, well, where did those sales come from? What sources did they come from? Okay. You should be able to look at your records that you've kept and say, well, did we generate those from a website? Did we generate those from word of mouth? Did we generate those from reaching out to people? Was it through a market stall? How did we actually generate the sales and where did they come in from? So that's something that's really, really interesting and something you should be commenting on. I want you to have a think as well about the pattern of sales. Now, we're going to look at this slightly later on in terms of our reporting, but I just want you to start thinking about it. What was it, certain months that it spiked? Was it certain weeks? Why might that have been? And we'll have a think about that later on. I've got a little example that I popped in, but just to get around your head, what was the pattern? What was the trends related to your sales? Again, thinking about your customers as well related to your sales. Who are they? Do you have different types of customers? Did you have businesses buying your thing or your service? Or was it all just, people? And then breaking down those people. Was it children? Was it adults? What data do you have? What age range? What were the customer profiles that were coming out there? Again, that can be some really interesting analysis that you can perform on your sales, saying, well, 20% of sales came from a website, 20% came from word of mouth, and 60% came from a market stall. Thinking of your pattern and your trend, which I'm going to look at later. And then my customers, thinking about actually 80% of my customers were between the ages of 16 and 21, for example. Can be really interesting information. So if you have that information about your customers, I'd be having a think about it. But you could also look at geographic information there too. So you could be looking at location. Again, something to think about. Where were your customers based? You might find out that Heather's Hairbands is really, really popular in Aberdeen, but not as popular in Glasgow, for example. Then, as I said, we spoke about the cost of sales, which, remembering, was our opening stock plus our purchases less our closing stock. So we want to make sure we have a think about that. And some of the analysis we can do there is we can have a think about, well, did we actually manage that properly? Does our cost of sales seem really high? Could we actually, instead of going to my friend and buying that silver material, could I have got it wholesale and paid less for it? Or actually, did I do the best deal that I could because I went to my friend? Did she give me a really good deal on that silver material? Do you want to have a little bit of a think about that too? And the other expenditure you have, you're thinking about the different types. So we had the stationery, the rent, the registration fee. There could be lots of other things. And within that stationery, you might be breaking it down further as well. It depends on your business. It's going to completely depend across all of the different projects going on here, what's going to be the profile of the money that you've spent. So you're thinking as well, in terms of your analysis, why did you buy it? Why did you spend that money? Was it necessary, or actually should you maybe not have spent it and then you could have saved more money in the business? So that's some of the things you want to think about with your expenditure. And last of all, when it comes to your profit and loss account, we want to think about profit. Now, I hinted at this, and there's two percentages which I think could be really useful to you all for analysing your profit and loss account. Now, remember, we had our gross profit at the top. Now, our gross profit was our sales less our cost of sales. So let me just put that there. And what you can do is you can work out your gross profit percentage. Now, what your gross profit percentage is going to be is your gross profit over your sales times by 100 to give you a percentage. Now, what that does is it basically gives you a number, a percentage that helps you kind of actually quantify how successful were you in turning the cost of making my hairbands into my sales money for my hairbands. Okay, so that's basically what that's telling us. So obviously, if our gross profit, the higher the number that is, the better, because that means you're making more profit per pound of sales. Okay, so if my gross profit margin is 60%, that's pretty good. I'm making quite a lot of money from my sales. Whereas if my gross profit margin was down at 2%, I'd maybe kind of want to be improving that, because that means for every pound of sales, I'm only making a little bit of money, making 2% worth. So that's not very good. So that's something that can help you just analyze and give a little bit of further insight into your gross profit. The next one then I have is net profit. Again, remember I said they're both very useful for giving different information. So the net profit, as you might be thinking, is all to do, it's very similar. So it's all to do with that net profit, which is our gross profit less our expenses plus our miscellaneous, I'm just going to put other, because I can't spell miscellaneous very well, other income. So it's that bottom figure. So our net profit percentage is going to be our net profit over our sales times by 100 to get to a percentage. Okay, and this time, as I said, it's basically giving you, being able to quantify though, the distinction between not only the revenue making activities or sales making activities, but also the other expenses going on, the other activities of the business. So the fact that you've had to buy the stationery and you've had the fundraising and things like that, the other things going on that isn't just selling, for example, Heather's hairbands. Okay, so it's taking into account the other expenses that the business has incurred. Now, again, that is going to be smaller. Okay, that is going to be smaller than your gross profit if you think about it, because your net profit is smaller than your gross profit because you've taken off the expenses. Okay, but again, you still want that to be as high as you possibly can. You want to be thinking about, well, if it's only 1%, that means for every pound of sales I'm making, I'm only making 1% profit. But if it's up at 50%, okay, my gross profit margin might be 60%, but if my net profit margin is 50%, that's really good. Because that's basically saying, even after all my other expenses, I've still made a good amount of money. Okay, it is going to be lower, but sometimes, on the other hand, it could be too high. You could actually say, your net profit might be, say your net profit margin, say it came out at 80%. You could analyze that and say, well, actually, what I could have done is I could have spent a little bit more money on maybe advertising and getting flyers made, and maybe, I don't know, social media advertising, like Facebook advertising or whatever it might be, or website, made my website a bit better. I could have spent more money there, and that might have helped me make more sales. So there's kind of a double-edged sword there. You do want it to be high, but also if it's really high, you might be thinking, well, could I have actually spent more money though and put more money back into the business? Was I just being really cautious? Was I just a bit worried about nothing sort of idea? So those are really helpful analysis that you can add in to looking at your profit and loss account, and doing those ratios, those percentages there can really help you just get a little bit of information. And as I said, you can compare the two because they give you different information. Any questions on that little bit? There's someone typing, I think, because I've just flicked back, so I'll wait and see. How would you account for someone leaving the company? Oh, wow. Okay. So if they were owner of the company, I'm guessing, you would have to look at their capital, and it depends on the format of the company. Because I don't think you guys are partnerships.
No, they're shareholders, Heather.
Right. Okay. So if we talk about a shareholder leaving, so if your shareholder's leaving, that would be a case of, I'm guessing no one else bought their share capital at the end. So your share capital, well, so that's a tricky one because I'm thinking of the legalities of that compared to actually kind of Young Enterprise Scotland. So if you can leave that question with me, and I'll come back to how this will fit into what you guys are doing, because I don't want to go into a total accounting standards definition when it's not quite needed. So leave that question with me. That's a really good question though, and I'll have a little think about how it's going to feed in directly to your accounts, and I'll come back to you on that one. But it's all to do with the balance sheet, which we're about to come on to anyway. Perfect. Okay, I'm going to come back to that. That's food for thought. I like it. So the next thing then we're having a think about is our balance sheet, which is our next financial statement, which is provided to you very helpfully by the system which gets generated, okay? And the balance sheet is all to do with the position of the company. So how you want to think about it is our profit and loss account is to do with the performance of the company, i.e. how much money you've made, and the balance sheet is to do with the position of the company. So what this has is, you sometimes at the top here would have non-current assets, but you don't have any, I don't think, unless you have bought something like a machine or a laptop or a car or a building, anything kind of long term, which I don't think you guys are going to have, so that's why it's not pulled through here. But just so for your awareness, if you were to look at other financial statements just out of interest, you will probably see non-current assets up the top. So that's your long-term assets. So things like cars, buildings, computers, etc. As I said, it's not pulling through here, so I'm guessing that none of you are going to have anything like that. So what you're starting with then is your current assets, which is kind of short term, and basically that's under a year. And this goes in a certain order, just for your awareness. And it goes in an order of what's called liquidity, which means easiest to turn into money. So it starts with the least liquid, so it starts with stock or inventory. So I've already hinted at this. So my stock or my inventory is my 10 hairbands that I didn't sell. So remember, I made 100 and I sold 90, and I had 10 hairbands that I didn't sell. And you see that coming through already. Oh, let me go back. Oh no, I've got too many things to click through. In my closing stock here. So that closing stock, that £15 there, is what is going to pull through to my balance sheet. Well, I'm not going to click back again. Too many things to click through. So you can see there, £15. That is what pulls through. That is what's left. That's what's sitting on my shelf. So that's what I want you to think about with your stock. What is sitting there on my shelf or in my warehouse at the end of this period? Okay, what is sitting there? Well, for me, it's 10 hairbands worth £15 each. Then what you have is your cash. Now, this is your cash that's in your bank account and your cash which you hold in hand. The difference between that is I don't know if you'll actually have any bank accounts, but it's actually in the bank account, held at the bank. Cash in hand would be that you've held it, you've got it in a safe locked drawer, hopefully in a safe locked drawer, in a little tin with a key and everything no one's got access to, in your classroom or something like that. And that's what it means by cash in hand. It doesn't necessarily mean that it's actually in your hand, in your wallet, or in your pocket. Okay, it just means that it's not in the bank account. But hopefully that's minimal, because safety wise you don't want to be holding it in your hand. You want it to be in the bank safety of the bank. So that then gets us to our total of our assets, and that's basically the resources of our company. So that's the resources. So that's what we use to help us make money, because we sell our stock and we have our cash, which is a resource of the business. Then what we do is we come down to the next section, which is our current liabilities. And our current liabilities is basically money we owe to somebody else. So if you are in a bank overdraft position, i.e. you've basically borrowed money because you've gone over your limit, and basically what the bank does in that case is they give you an overdraft, which is lending you money. That's what a bank overdraft is basically. It's a kind of a loan. It's a very, very short-term loan. But you also might have a loan coming through here. If you borrowed money from somebody and you're going to pay them back, that would be a loan. Okay, and that's a liability because you have to pay them back. You owe them money. If you think of that definition at the start, you owe them money. So the bank overdraft, nothing here because they've not got that. They've got £475 in the bank. We then have this young enterprise winding up fee, which you owe to young enterprise. So you've not paid it yet. So that's why it's a liability, because you've not paid it yet, but you do owe it to Young Enterprise Scotland. So it comes through there. You then get your total, and that pulls through. And then at the very bottom part here, you have what's known as issued share capital. And this is basically all to do with kind of the funding of the business, the initial funding of the business. Okay, the funding and the owners. So what you have here to begin with is the 50 shares at £1. So that would be the money that's created and put into the business to begin with. So people buy shares at £1 each, 50 of them. So that raised £50 in the business. Okay, so that's sitting there. There's 50 shares that people hold. I mean, it might be one person that holds all 50 shares, or it could be 50 different people that hold the shares, or maybe someone holds 10, someone holds 40. It could be a huge big mix of things what happens. And you can imagine in big companies, especially that trade on the stock market, that can change all the time who's owning those shares. Okay, so what I'm thinking about what's happened with this question that's come up now, I need to kind of understand further what's happened to answer it, is if somebody's just left the company, has someone else basically taken over their share? Because this then wouldn't change and you wouldn't really have to do anything other than on paper just change the owner's names of the shares. But if it's a case of reducing the share capital, I'll need to have a think about that, okay? But basically, so let's say two people hold 25 shares each at £1 each, so the £25 worth. One person decides to sell their shares. Nah, I don't want to be part of this anymore. I want to sell my shares. And a third person comes along and they say, oh, I'll buy your shares. The company doesn't receive that money. That's all going to the person that sold the shares. So it doesn't actually impact the company. For the company's point of view, they've still got 50 shares in issue at £1 each. Okay, so it's not actually to do with the company. It's to do with these people that have just decided, nah, I don't want them anymore. So that's like me going to the stock market and I've bought shares in this company and I've said, right, but I don't want them anymore. I'm just going to sell them on. But that doesn't impact the company because they still got them in issue. Someone else just buys them. So that's where I need to just understand exactly what's happened. But essentially, you might not need to do anything. It might just be a case of kind of scoring it out on paper and kind of on some record of who holds what shares and deciding that. Then what we have is our profit and loss account. And again, I'm just giving you some information in case you do read some other accounts just for research. This can also be called retained earnings. And what this is the profit that you made during the year, and it gets put into this big pot. okay? Because that retains within the business. So that becomes kind of the owners of the business basically have an entitlement to that money. So it goes into this big pot called retained earnings or profit and loss account. Now, because you've only been operating for one period, that is going to be exactly equal to your profit made in the year, to your net profit. But let's just, for argument's sake, just so you understand exactly what it is. So in year one, just now, it's net profit. In year two, it's going to be the net profit of year one plus the net profit of year two. So it's a big pot, okay? That's my big pot. So in year one, this is the amount of profit that goes in. Next year, I make more money, so then this amount goes in, and I'm up to here in my pot. And then in year three, I make this amount of profit, and that goes in. So it starts to build up. So it's going to build and build and build and build year on year. Okay? If for any reason you make a loss, this would reduce it. So let's say I am at this, this is my beaker. Okay, I'll start it again actually just to see. Well, it's not letting me rub it out. But let's say we made the loss the next year in year four. What would then happen is my loss would kind of overwrite that profit that I previously made, and it would bring it back down, and I would then be at this position, okay? If you made a loss in year one, this would be a negative, and it would come through. You don't need to worry about that's going to do that, but if that is a negative in brackets, that means that you've made a loss, okay? So it reduces basically the amount that's it's available. And that then totals up to what's called shareholders' funds. There. And you can see something very interesting here. That, remember what this is called? It's called our balance sheet. It's called the balance for a reason, because our current assets less our current liabilities is equal to our issued share capital. See that there? 458, 458. So that's basically telling us in our balance sheet, well, for all the things, all the assets, the resources, and the liabilities we have, so all the things we have to make money and all the things that we owe because to help us make money equals what is attributable to the owners of the business, i.e. the shareholders' funds. Hopefully that's making sense so far. We have multiple lines for shares sold if they were different amounts. So again, if you're selling shares, you should only really be issuing shares at the very start of your business. You shouldn't, if people sell shares, that's up to them. It doesn't impact the company. So once you've issued the 50 shares, if someone then decides to sell them to their friend, that's to do with them. But in terms of the company point of view, you've still got 50 shares being held by different people, if that makes sense. So let me see if I can maybe do a wee drawing here.
I'll also jump in here. That's okay.
Yeah,
So
go for it.
all shares in young enterprise companies are all £1. So the company decide at the start how much they're going to sell to raise that that fund. So I think the question about the different amounts hopefully is about the different amount of shares people hold, not the different prices of the shares, because they're all £1.
Yeah.
And therefore that figure is just the collated value of how many shares have been sold at the start.
Exactly. I think maybe there's just a little bit of a confusion. I just want to, because you shouldn't be able to reduce shares. That's a big minefield, reducing shares. But basically, so let's, oh, come on, pen. So let's say I have, to begin with, okay, I issue, I'm just going to say for argument's sake. Come on, pen. I think it's running out of battery, my pen. Oh, come on. Oh, right, click through. Just, I wanted a bit of blank space to draw in. Oh, goodness. Technology is great, guys, isn't it? Okay, it's not letting me draw. What is now? Right. So let's say I have two people starting up this company. Say there's only two people in my company, and I have issued 20 shares, okay, at £1 each. Each of them decide to hold 10 shares each. So in my balance sheet at the bottom, my share capital, my shares issued is going to be 20 shares times £1 each, so it's going to be £20. Now let's say this person decides, nah, I don't want my shares anymore. I'm going to sell them to this person over here. Well, all that happens is that those 10 shares get put over there. In terms of the company, I still have 10 shares here and 10 shares in issue here. So this doesn't change because it doesn't matter what that person sold them to their friend for. In terms of the company, you issued 20 shares at £1 each. So that does not change. That remains at £20. Okay, hopefully that clears that up a little bit. But in terms of the company, it doesn't matter who's got the shares and if they've sold them on. It's all to do with the company's point of view. And from the company's point of view, you have 20 shares at £1 each, and that hasn't changed. So hopefully that just makes that a little bit clearer. If not, pop it in the chat box and I'll come back to you at the end. So it's very complicated to get into further things, but hopefully that's helpful. So just in terms of our balance sheet then, so we had our non-current assets. So as I said, I don't think you'll have any, but it's things like our machinery, laptops, buildings, cars, example. Our current assets are stock. So when you think about your stock, I want you to be thinking about how much have you got left? And then you're going to analyze that. You're going to say, oh, well, did we make too much? Or if you ran out and you've got nothing left, you could have actually said, oh, we could have made more and then we could have sold more. So all feeds through. The balance sheet and the profit and loss account are very interactive. So you're thinking about, well, if I get loads left, well, maybe I should have spent more on advertising to sell them on, or maybe I just made too much, so then my cost is too high. Okay, so there's different ways of thinking about this. I want you to think about how much have you got left? What does that mean for your business? Any debtors, any money that you owe? Why do you owe the money? Is it just because you took advantage of the credit that they offered you, or have you actually not got the money to pay them? You might want to be thinking about that. Thinking about the cash and bank in hand. Again, you want a good amount of cash and bank in hand, because the whole concept you might have heard before of cash is king. Cash is really important, but if you've got loads and loads of cash, well, that's not great, because you could actually be doing something with it. You could be making more money by actually reinvesting it in the business. So if your bank accounts are really, really high, you could be, oh, well, actually, we could have made more, or we could have gone and done something else with that to do better, instead of just leaving it sitting there in the bank. So that's up to you. It depends on how you interpret it. So there's no right or wrong here, guys. It's all about how you interpret this information for your particular business. So current liabilities, the bank overdraft. So if you've gone over the amount and basically the bank's lent you money and you owe that to them, you want to comment on that and why that has happened. As we said, you've got your young enterprise winding up fee, and the reason that was a liability was because you haven't paid it yet, because it's payable at the end. And we had our issued share capital, and that's like my little 4 people there, and that's all the shares that they're kind of holding in my jigsaw. Profit and loss account being my beaker of money that goes in every year. So you're only going to have 1 year. So it depends how much money you put into it. I don't know. You might have put in loads of money. If you made loads of money, you might not have made that much. So then you're going to think about actually reporting on this. Now, a lot of this is going to come from what I've spent time talking about so far. So what I want you to think about in terms of structuring your reporting and typing it all up, I want you to think about each of those main headings. So I want you to think about telling the story of your company, okay? So what's happened throughout the year and what's led to all of these figures? So you're thinking about, well, what is the information behind the numbers? I don't want you just to tell me, well, you're not telling me, you're telling the people at Young Enterprise, but I don't want you just to tell them, oh, we made £100 of sales in the year, right? So what? Okay, how did you make those sales? When were the sales made? What were the customers? Where did the sales come from? Okay, all of these different things I want you to think about. Information behind the numbers, not just the fact of, oh, I made £100 in sales. Oh, great, thumbs up. But even better if you tell us how you did it and what the information was behind it. Also have a little bit of think about, is there any challenges that your enterprise came across throughout the year and how did you overcome them? Okay, so that's really important. And then you can tie in some numbers to that. You could say, well, actually, you know, we were struggling with cash, or we were struggling to sell stuff, but then all of a sudden we thought of doing this advertising technique or doing social media or whatever it might have been. And this is how we then combated that. So telling the story of what's happened throughout the year, or the month, sorry. In terms of your sales, how you achieved those sales, where did they come from, the trend in the sales. Now, I'm about to look at this in the kind of next slide, but I wanted to think about the trend. I wanted to kind of look at adding maybe a graph, thinking about what months did you sell in, what was the trend there. And in terms of your expenses, I want you to analyze into the types of expenses that you've had. So we spoke about those: stationery, postage stamps, advertising, whatever it might be. And how did you manage them? How did you actually try and manage your expenses to keep them low? Did you constantly keep an eye out for, you know, new suppliers? Did you switch halfway throughout the year? Did you say, oh, actually, Royal Mail got really expensive, so we decided to switch to DPD for our postage services, and that saved us loads of money? So again, thinking about this whole concept of trying to tell the story. So it's not just about pulling numbers out and saying, oh, well, because anyone could read that and say, well, they made sales of £100 and they had expenses of £50. What does that mean? How did you do that? What's the information behind that? So that's what I really want you to focus on when you're doing your narrative, typing up your report. So one of the things you can do to help this is you can use graphs. Okay, so this first one here is a line graph, and this is showing us the trend. So I've just populated some numbers in an Excel and created this here. So I've just done September to January, and I've made sales across that time, and I can see here, this is the trend of that. And then what I do is, but you don't stop there. I want you to think about, so what? So that's what I always have in my head. So what? What does that tell me? Okay, comment on the trend. Well, for example, here, you can see that sales have spiked in December. That was due to Christmas. Everybody wanted to buy my hairbands in Christmas for gifts for all their friends and their family. So my sales spiked. And then in January, I actually did a 50% off sale because I thought, oh, you know, January blues and everybody after Christmas, let's do a sale. And then my sales spiked even more because everyone was like, oh, the Heather's hairbands are now £5 instead of £10. Amazing. So that's the sort of information you want to look at and saying, well, actually, there was a dip in October, November, but that's because everyone was focusing on Halloween and they weren't buying hairbands. And then in November, everybody was too busy thinking about everything else and they hadn't really thought about Christmas yet. And then in December, sales boomed. So information behind it. You could also create a pie chart showing your split, and you can do this for both sales and expenses. So here I've done like my sources of my sales. So I've said, well, 65% came from social media, 13% from my website, 3% from phoning me, and 19% from my market stall that I had. And then what I want to think about is why that might be. Is that because of the type of customers and what you're selling, that social media is the way forward? Or maybe you didn't advertise your telephone numbers, they didn't phone you. Or maybe you only had the market stall for a day and you could actually done it for like a weekend and got loads and loads of more sales that way. So think about why, and again, telling the story. So in terms of your summary, so you've got in your report, you've got like a big narrative bit in financial performance, and that's what I want you to think about, all your graphs, and I want you to think about telling the story and adding as much information as you can from the numbers. But then you have to do a little kind of summary, and this is thinking about the headlines. So I want you to think about the main things that you pull out from that narrative that you've done. So you want to make sure you mention the profit that you've made and any key financial figures. And what I would do as well is I would pull out any major successful events which lead to your sales and any major customers. So let's say you did have a market stall for a weekend and that led to really boosting your sales. You would actually comment on that in your little summary. So it's basically, you want to give like the main headline. So if you were thinking about, if this is a newspaper article that I've just written, what would my main headline and maybe my little taglines underneath it be? What would be, you know, the 6 o'clock news when the gongs go, what would those headlines be? And that's what you want to include in there. Okay, so that was a whistle-stop tour of financial reporting. But any questions on that, guys? For a lot of information, but try to make it as relevant to young enterprise as possible.
Nothing in the chat so
Nothing.
far, Heather,
Okay.
but can I just say a huge thank you? That was really, really helpful, even from my point of view, to hear all those things explained so clearly, and hopefully for the students here that I think represent a huge number of companies, which is excellent to see. We should see a much more comprehensive look at people's financial performance, because for people who are on the call, financial performance and the detailing of that financial performance, we actually have to write the narrative around it, is one of the things that teams don't do very well often, and it's one of the things that makes teams that do it well, it makes them stand out to the judges. Just in my own experience of having judged local finals and nationals over the past couple of years. So if you can get this bit right, then I think you're on a really good track for making really good progress in your regional finals in the next couple of weeks. And obviously your reports are due on the 19th of March, so just under 3 weeks time, so plenty time to put some of the things into practice that Heather has spoken to you about today. But does anybody have any final questions before we finish up? Please do type in the chat, or feel free to stick on your microphone and let us know.
I was going to ask a quick question actually myself. I was going to say, what was the date exactly for you saying there? Something of March 19th? Was it 19th of March? You're saying about reports?
Yeah, 19th of March is the submission deadline.
19th. Thank you very much.
All right. Some regions have got some slightly different dates and timelines, so you're best checking directly with your local area team for what you're about. So please do just double check that your region is the same. There's a question about HSBC banking yet. Feel free to type it in or come on to Mike to ask us.
So basically, I was going to ask if we are allowed to do online banking, and if we can use like the normal HSBC like banking app on our phones to just check how much we have in our bank account.
Unfortunately not, and it's due to the age of the participants. So because for have a business bank account, you be over 18. So this is a special type of bank account with HSBC for young enterprise companies to allow you to have an account, but unfortunately that means there's no online banking.
Okay, thank you.
No worries.
Yeah, I didn't know if it was through the accounting. I was like, I can't answer that one. That's for you, Peter.
That's fine.
Yeah, but thank you very much, everyone, for your attention and participation. I think the main thing, as Fraser said there, it's what I wanted to try and stress to you is it's not just about just commenting on the number, saying I made sales of this, I made my costs for this. It's telling the story and what do those numbers mean, and that's what's really going to make you stand out. If you can actually have a think about it, and I've given you some tools to analyze it based on your graphs or some of those percentages that I've given you, you can actually have a think about, well, what does that mean for the company, not just, oh, okay, that's the number. Don't just pull out the number, think about why.
It looks like we've got one more question from Lewis. Lewis, do you want to just come on, Mike? Or
yeah, hi. At the start of our sales, initially we had a problem with our supplier, and that as a result of a delay, he actually didn't charge us. So what would we claim that under on the report? Would it be under donation or something?
So it wouldn't be in terms of income because it's not actual income. It would just be your cost would be reduced. So you wouldn't have to. You would, instead of that coming through really clearly in your statements, you would comment on that in your narrative. Okay, so you would say your cost of sales will probably be a lot lower because of that, because they didn't charge you. But you'd be able to comment and say, well, because of a supplier fault, they then actually discounted or gave us free, and you'd comment it on in your narrative rather than it actually coming through. Because in terms of the accounting for it, the cost to you is nothing, so it would go through as nothing. Does that make sense?
Yeah, thank you.
Not a problem.
Okay. Any other questions before we finish up? Doesn't look like there's anything. Just a reminder for those of you, hopefully your central leads will have told you, but there's another training session on Thursday evening at 4:30 on Microsoft Teams, again with myself, all about presentation and interview skills, which is the other elements of the evidence criteria that you need to submit for the 19th, or slightly different dates depending on what region you're in. So please do let your other team members know. If it's not you attending, it'd be great to have somebody from your team coming to hear a little bit about what we're looking for from the presentation and interviews. But thank you so much for attending and giving up an hour of your time this evening. I really hope that's been useful. Thank you so much to Heather from ICAS for giving up her time as well to give a really in-depth look at the financial statements, and hopefully I look forward to reading all of your reports in the next couple of weeks as they come in, and I look forward to seeing all of the wonderful financial narratives that I'm going to get to read. So good luck with everybody, and if you get any more questions, please do contact us on companyprogram@yes.org.uk, and we'll try and get back to you as soon as we can to help with any queries. Thank you.
Thanks, everyone.
Thank you.
Thank you.